Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is Sunday, April 10th, 2022, and this is the weekend market review where we dive into some of the most important charts in the general equity and fixed income markets, commodities, etc., from a weekly perspective to give you a better sense of where we've been, where we are, and where we may be headed. These videos are free to the public for the time being. Wanted to just spread the word about our kind of change in our premium service, where we're going to be offering monthly subscription tiers at $37 a month via Patreon. That includes all the videos, the uranium videos, the energy videos, the gold and silver videos, copper, etc., that we publish on a weekly basis, as well as a premium Twitter feed that we post timely charts that have a really good potential to break out, some of whom we are investing in directly ourselves. So if you want that, $37 a month. If you just want those premium access to the Twitter feed, you can sign up via Patreon for $10 a month and support the work that we're doing. Either way, much appreciated. If $10 or $37 a month is too much for you, send me a note. We'll figure something out. But more importantly, I appreciate your follows and your support and your retweets, and really passionate about this. And I hope help some of you guys make a lot of money, and certainly prevent you from losing a lot more. So starting with the S&P futures, actually we're going to go just to the SPX. I kind of like this chart a little bit more. Bottom line is, right now we are in a consolidation phase. So we're technically still in an uptrend here. We expanded that zone since the last pullback. We broke out of this bullish flag back in March of 2022, and now we're consolidating once again. Now, what's interesting about this consolidation is that the MACDs are approaching zero, but what often happens is, just when you think things are going into green territory, it kind of rolls over for another more shallow multi-week pullback. I have a hunch that's what indeed may happen, but yet we're still in a bullish flag here. And so long as we hold this roughly 4,400, 4,370 area, I still think that we're going to, at a minimum, retest the highs that were set just a couple of weeks ago around 4,639, and possibly even retest these highs at 4,800 later on this year. So right now, I would say perhaps a couple more weeks of consolidation, perhaps another couple percentage points to the downside are very much possible. But I think the bulls, for the time being, are in control of this market. The VIX, and this is why I'm saying what I'm saying, the VIX broke down from its bearish flag here. And if it cannot recapture this bearish flag to the upside and recapture this uptrend, I think the VIX is going to be sold so long as below that 25 area. So watch this area very closely. Below 25, this is a sell, and this is a buy for equities, buy signal. Above 25, then you're looking at a different story altogether. Right now, stocks above the 200-day moving average are still not great. We're struggling to clear this 50 RSI resistance, and until that 50 RSI level is broken to the upside, I still defer to that the lows, the longer term lows, are probably not in on this move, even though we might still see another 5-10% points of upside in the SPX. So we're watching this carefully. This is the trend line that needs to be broken to the upside to confirm a bullish case. NASDAQ. So the NASDAQ it's had some nice weeks of late, but it got rejected at the 34-week moving average here twice now, and it appears to be potentially rolling over. And this is what I was talking about last week. If we couldn't clear and keep that 50 level, and if RSI or MACDs could not break that zero barrier, I do think we're going to see a couple of weeks of pullback here. Beyond that point, we'll have to see if there's support around these levels or we break through the previous lows. NASDAQ volatility. So NASDAQ volatility is bottoming around this 34-week moving average. And so right now, I would not want to be long NASDAQ, because the VIX is starting to curl here, or the Vixen, and so if it clears 31 to the upside, then I think we're going to see a lot more volatility on the NASDAQ. NASDAQ stocks above the 200-day moving average are pretty much making new lows or very close to them. So that's not a great sign. I think NASDAQ and tech stocks in general continue to remain weak. Here, the Russell 2000 futures broke below the 2000 level once again and are pretty much trading at their lows. MACDs were actually some of the strongest among the major indices, but now are also rolling over. And the fact that we couldn't break above this 2100 level was indeed a problem. Now, with that being said, you're still above this bullish flag right now, and this could simply be a back test. So the next couple of weeks will be telling to indicate a direction for the markets. Above 2100 on the Russell, bullish. Below 1965 on the Russell, I would say that that's more bearish territory. Russell volatility index. So it broke down from this rounded arch pattern. Let's see if this can be recaptured to the upside to create more volatility, or again, just a simple back test here. The Russell 2000 stocks above the 200-day moving average. Also, we're starting to improve, look much better than the NASDAQ, but last week was pretty bearish, a little candle here. So we'll see which direction it goes, if there's a follow through here to the downside or potentially a breakout above these levels. But the direction there will be determined by that particular, index. Emerging markets. So emerging markets had a nice 3-week run here, but are now struggling to break above this trend line. And it did break above it, but if this is a breakdown to the downside, that would be a bad sign. That would suggest a potential fake breakout was in the cards, and we may yet see lower prices. So let's watch on the EEM. Let's watch 4450. If that level holds, then potentially, we still might make a push higher. If 4450 is breached, then the next support is around 4350 or so. But emerging markets, the one good thing about last week's move here is that it was on lower volume, right? So that might be a positive indicator, but we'll have to see. This week, I think, will be very important for confirmation. Chinese stocks. So this looks to me like it wants to move lower after this fake breakout here. Chinese stocks do not look strong at all, and I would not be a buyer. Chinese internet ETF, I mentioned how I would only buy above this pink zone here, around 40 on the KWEB. Well, it had a really nice rally off the lows, a tradable rally, but it got rejected here. And if it can't recapture that, I would imagine it's probably headed to new lows. Same thing with Alibaba. Alibaba should have broken above 121. It did not. Now it's being sold around these levels, and I could see a lot more weakness in Alibaba. So don't get too confident, because if it doesn't break 121, I think it's going to at least retest those lows back at 72. Hang Seng Index, this is kind of what we were talking about here. Just right now, just a lot of weakness in Chinese stocks, and until that changes, I would stay away from Chinese stocks altogether. So that's kind of what I'm looking at. Whoops, didn't want to do that. There we go. So bottom line is it's being rejected around these levels. Unless it can get above this 23,800 level, I think the Chinese stocks are going to be moving lower yet. KOSPI, the South Korean index, overall looks pretty strong, but again, right now it's showing a little bit of weakness. Above 2,800 or 2,900, this would be a buy. Below 2,500, this would be a sell. So one of the strongest stock indices countries was Brazil, but finally pulled back some here, but nevertheless found support. So there's a lot of support still for the uptrend, I think, and I do think Brazil continues pushing higher towards 42 to the upside. So as long as this level here holds roughly around this little trend, then I think Brazil continues to push higher. So semiconductors were by far the weakest sector of the market, and they are a cause for concern. Semiconductors, if they don't lead the market, then generally speaking, the market is weak. And they closed at the lows of the week, and I think semiconductors likely break below that 30.85 level and probably push towards 28.03. So not a good sign for long-term economic growth, if you will, if the semiconductors cannot stay in a rally here above 3,050. This was a shooting star and at resistance, and so down we went. Internet stocks also very related to the semiconductors. Also had a rough go of it, down 5%. So if this is a retest, great. If it's not a retest, then again, in the MACD's rollover, I think we might see a couple of weeks of weakness again. Google. So Google looked like it was breaking out, but this does not bode well if Google breaks that 2650 area roughly. Below that level, then you're probably looking at a retest of the lows of 2500. And if that happens, then the markets likely probably go lower and Google potentially retests 2100 all the way down to the bottom here. So not a good sign. And this is what I'm talking about, this little kiss of zero and potentially a multi-week pullback. Facebook. So Facebook had a good run, but a bit of a shooting star here. And I think Facebook gets rejected at RSI resistance and probably retest the 200 level soon. Amazon also was rather weak last 2 weeks and potentially has to retest the previous breakout level around, let's say, 2950 or so. So Amazon is weak right now. Apple was potentially breaking out, but a lot of resistance here, and Apple looks like it wants to roll over as well. Again, I'm not suggesting we're going to new lows on these stocks, but I do think a couple of weeks of weakness is possible. Micron Technology is selling off right now on the heels of pretty good earnings, but if this level breaks, and it will break because it's creating lower lows in momentum, I mean, Micron is on its way toward probably around 65 or so to the downside. AMD has been strong for a long time, but this looks like it wants to break lower. It broke the uptrend from 2020, and I think AMD is going to break this triple bottom and probably head towards 95 before potentially finding a little bit of a bottom there. NVIDIA, bearish, very bearish candle here. I think NVIDIA is on its way towards 208, potentially as low as 191 to the downside. Tesla is one of those stocks that's been acting strong. I mean, it's got these moving averages moving higher, but this was a shooting star. The last time we had a shooting star, we had multiple weeks of pullback. So wouldn't be surprised to see a consolidation, potentially some sort of bullish flag like this be created before it determines the next direction. ARK did break out of its downtrend, but potentially this was a very bearish candle last week, and I think ARK wants to move lower yet. All right, Berkshire Hathaway, beautiful hammer pattern on the week. So this is a market right now that is bifurcating. You're seeing tech getting slammed again, but you're not seeing everything get slammed, and that's not a bad sign. That suggests that this is just a stock picker's market, and you want to be in the sectors that have high free cash flow and are participating in some of the segments of the economy that are very strong right now, such as commodities and some of the staples. So Berkshire Hathaway, very good bounce here. With a hammer pattern, I think Berkshire Hathaway continues on higher. Developed market ETF. So it bounced off of support here. Let's see what next week brings. Is this going to maintain support, or is it going to break lower? Watching this one very, very closely for direction. Financials had a nice little hammer pattern on the week after the pullback, and I think their pullback is probably over, and financials are going to start to relatively outperform. European financials, on the other hand, they're still acting weak. They back tested this uptrend here, and it doesn't look like they have enough strength to break higher. And so, if they cannot recapture these levels around 19 on the UFIN, I think that they're gonna start moving lower once again. So, careful on the financial front. Transportation. This is the sector that's scariest of all. If this was a fake breakout shooting star, and this was a major candle to the downside. Transports were down 7% last week. So if this 240 level cannot hold, then I think we're probably headed towards 197, and that would be very bad for the general economy, the general stock market. So what I'm going to do is I'm going to extend this particular line here, and I think that's ultimately going to come in as potential support. But this is not a good sign when the hottest sector just switched on a dime, and that's what the markets do. They switch on a dime on us and move lower. So we got to be very cautious here with some of these sectors. Another area is home construction. I mean, they've been getting slaughtered, down over 30% over the last couple of weeks. And frankly, this might be a little bit of a support zone, but I think it's going to continue moving lower towards that 51 area and grind lower. Biotech, it's an area that we've been starting to dabble in. On the one hand, you've got this inverse head and shoulders showing relative strength, but we got a shooting star. So we might have another several weeks of negative performance on the XBI, even though the MACDs are in bullish territory. So it's acting stronger, but still not great. Here we have the regional banks, again, breaking down from this uptrend, or you might view it as a bearish flag. So regional banks breaking down is typically not a good sign for long-term economic stability and so on. Microcaps rejected here at resistance at 132. I mentioned that it was very important to hold this level. Didn't do it, and down it went. So let's see if there's a follow through to the downside, or potentially a recovery and break back above this 131 level. Again, relatively strong, but still looks like they want to break down. Dry bulk had a nice support level rally here, hammer on the weekly close. So let's see if there's more follow through to the downside, because to me, you can look at this one of two ways. You can look at this as a potentially head and shoulders setting up on bulk shipping, right? So we want to be careful there. On the other hand, you can look at this as a cup and handle formation. So time will tell which direction bulk shipping is going to go, but it's certainly an indication that things are slowing down with economic conditions. On the other hand, 10-year Treasury is absolutely on fire, breaking out. However, notice this RSI trend line. It's back testing this level, and it's extremely overbought. And I could see a pullback here on the 10-year. There are a lot of gaps to fill, starting with those at 2% here. There's a gap here, and there's a gap here. So I wouldn't be surprised to see some weakness on the 10-year Treasury, and perhaps some strength on the 20-year bond, which has been absolutely destroyed over the last couple of weeks and months. So next couple of weeks will be very telling which direction the markets want to go. Long duration Treasury down 7% last week. That's absolutely stunning. And I don't know when this is going to turn around, but the longer this goes lower, this was kind of our target here around 113. But as longer this goes lower, the more likely we're going to see a financial earthquake somewhere. And that's not a good sign. Here's the Vanguard Intermediate Corporate Bond ETF. Again, this is where I would expect to find support. So as a value investor, I would be looking to potentially accumulate this chart versus sell it, when most folks are suggesting to sell it. But you look at this long term, and this is a very nasty arc, right? So yeah, I mean, we can draw it a number of ways, but bottom line is this this was a very bearish formation, and now we're kind of towards the bottom of it, in my opinion. I don't think it's going to go much lower, but remains to be seen. High yield bonds down 2%, outperforming treasuries, which is interesting, but still very weak, and likely breaks these previous lows at 79.88 and probably heads towards that 79.50 area, potentially even lower towards 78 here. So this is interesting. The high yield index option adjusted spread, it's doing quite well. So spreads are not widening, which suggests that even though there might be a pullback in the general economy, it's not indicative of a recession. And so long as this chart doesn't break out, then I think then the economy will avoid recession. But with that said, it's interesting. It's interesting that this is kind of a rounded bottom setup here, and if this does not break down, eventually this will break out, and this will lead to a recession. So we got to be careful there. The MOVE index. So the MOVE index is the bond volatility. This looks to me like a symmetrical flag that likely breaks higher. So we got to be careful. If this breaks out and goes to 163, I expect there to be a sharp down move in equities. Bond volatility, the TLT, broke out last week. Momentum didn't necessarily break out, but this is another key indicator to watch. If bond volatility really takes off, then you're going to see a lot of volatility in equity markets. U.S. dollar. So U.S. dollar continues breaking higher. With that said, there are some signs that there's some negative divergence as it moves higher in price. Momentum is not making new highs here. So higher price, lower momentum. I think eventually this rolls over. When it happens, how it happens is anybody's guess. I still think probably we're headed towards that 102 area to tag this higher boundary here. Uranium, absolutely on fire, continues to break out. I think it's going to continue moving substantially higher here. I mean, this looks to me, we suggested for a while, this was headed towards 25. I think that's where uranium is headed. We're going to be publishing a premium uranium watch list later today with some of our best positions. Global URA ETF looks to me like it's about to break out towards 31. RSI is nowhere near overbought, and I think it's going much higher. URNM, same sort of story, much higher prices, in my humble opinion, for URNM, with these moving averages now bullishly crossing to further support the thesis. Rare earths, bearish week this week. Let's see what next week brings. Are we going to follow through to the upside or downside? Right now, it's kind of in no man's land here for the time being. Marijuana, potentially a fake breakout here. Be very cautious. If this cannot rally next week, I think this breaks down and moves to new lows. All right. I know this video is getting long in the tooth, but there's a lot to cover. Here's copper. Copper continues to look like it wants to break out higher. So copper is a great place to be. Copper miners, bearish on the week. Also could not break out on RSI 69.1 level. Double top, potentially with bearish divergence from this previous high versus this attempt. So there might be a couple weeks of pullback in copper, but I think copper does break out here sooner rather than later. Gold. Gold was up about 1% last week. This looks to me like a bullish flag that wants to break higher. So with that, we're going to cover a gold and silver, publish a gold and silver watch list later on today with our observations on some really interesting and compelling setups. Gold miners, they certainly don't want to break down, and they appear that they want to move higher towards 45 on the GDX. GDXJ, same sort of story. Perfect back test off the upward sloping 9-week moving average. I think the next target here is 55, followed by 63. So long as this red line is held, you want to defer to the bullish case right now. Silver futures, not too exciting, but with that said, this is a bullish cup and handle. And once this breaks above 25, let's say 60, I think we're headed towards 29 at a minimum. Silver miners, not super excited about this move, to be honest, but nevertheless, this is a nice setup, and I think it's going to break to the upside relatively soon. You'll see in our sector watch list. Silver juniors, likewise, not acting super strong, but consolidating constructively. If it breaks above 15, I think it's headed towards 18. Platinum is not looking great, to be fair, but a couple of hammer patterns here of late. So I think we could be starting a bottoming formation amidst a cup and handle here. Palladium, nice little attempt at a recovery, rejected at the 9-week moving average. So let's see if Palladium can follow through to the upside or has more downside ahead. Crude oil, bullishly flagging above uptrend. So nice multi-week correction. And let's see if there's more downside or it's going to recover back to previous highs around 131. Certainly the energy stocks didn't really much notice that crude was correcting because they continue moving higher, and there's just a continual bid to the upside for energy commodity stocks here. Small cap energy, about close to our upside target around 11. This has been a great move from the lows of $3 to the highs of 11. That's a 3x move in an ETF. You don't typically get that. Steel is consolidating here above that previous high breakout, and I think steel is going to move higher once again. However, with that said, we have to be cautious because it was rejected at the 69.1 level, which is the previous breakdown level around here. So if steel cannot recapture this level, and if it breaks below roughly 65 on the ETF, then I would put up a caution flag. Till then, consolidation. One that we want to start covering here is the land ETF. This has had a phenomenal run, perhaps the best run of any sector of the economy. So land is certainly very attractive, and this ETF, farmland, is breaking out. So I think that this continues moving higher. And then finally, Bitcoin. Bitcoin consolidating below a downward sloping 34-week moving average. I think right now, if it breaks below 41,500, I would be cautious because I would have expected it to rally here, and it did not. And so that's a cause for concern. Ethereum is much stronger right now above this bullish flag. If it can consolidate here and break above 3,500, then it's going to head towards 34,000 rather to the upside. So if I had to choose right now between Bitcoin and Ethereum, it would be Ethereum, particularly with these MACDs having crossed the way they did. So I view this as a potential back test of the 50 RSI level before it moves higher. So that's it for me, guys. Stay tuned for our other videos. Appreciate all your support. Again, patreon.com/moneyology and sign up there monthly for $37 a month, or the $10 a month premium subscription for the Twitter feed. Thanks again. Take care.